Are you someone who's always considered real estate or real estate investing but just hasn't pulled the trigger? Well, if that's you, you're really going to enjoy our conversation today. My name is Ryan Richards. I'm a real estate investor and mortgage loan officer based out of Massachusetts and Rhode Island. Today I had the pleasure of sitting down with Abigail Chrisafideis. We talked a lot about her journey into real estate, how she bought her first multifamily property when she wasn't really ready, but the significant impact that that's playing on her financial future and her career with her jumping in now as a full-time real estate agent. We talked through the trends that we're seeing up here in New England real estate market. What are we seeing on the buyer side in terms of demand, the sell side in terms of sellers' perspectives, marketing, and we talk a lot about real estate investing. There's a lot of things that you don't know when it comes to real estate investing that you honestly never will until you get started. So we talk through some of Abigail's personal experiences on things she learned throughout the process that maybe she would have done better, or things that she's grateful she did that got her into the position she is today. So if you're interested in learning more about the New England real estate market, how to get started in real estate, whether it's an agent or as an investor, and how to overcome some of those typical fears that prevent many people from stepping in, this is an episode you're going to want to tune into. Abigail.
Thank you for having me.
Of course, thanks for coming on. I know we obviously have a lot of mutual connections through your team and through real estate, so it's been really cool watching you and your team grow collectively over the past few months. I think you guys are doing some really great things.
Yeah, it's been great. I'm very grateful to be on the team. It's been wonderful having support. We bounce ideas off of each other. Everyone's always just a phone call away, so it's been very, very helpful. And
I saw in some of the marketing you guys have put out, I saw a little bit about your story, joining in real estate. But for those who don't know about you, tell a little bit about your journey to how you got into real estate as an agent and what's your vision for where you want to be in your career.
Yeah, so I actually got into real estate a few years ago. My original background's in nursing. I've been a nurse for 5 years, a pediatric nurse. I graduated in 2020. But while I was in nursing school, I was also waitressing at a restaurant in my hometown. And I remember I used to work as a waitress until last call, which would be midnight, go home, shower, wake up at 4 a.m. to go to the hospital. And school was 4 days a week, and I waitressed 3 days a week.
It's a grind.
It was a grind. And I remember I was at my aunt's house one day, and my uncle's a very successful man, and he owns a sign company. And so growing up, I always thought that was through the sign company. And I was there eating dinner, and I was just complaining about how am I supposed to do this for the rest of my life? How am I supposed to wake up and go to work every single day, blah, 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 blah. And my uncle was like, well, buy a house. And I was like, why would I buy a house? That is going to make me poor.
Sure.
And so that's when I found out, basically 19 years later, that he became successful through real estate. And so he sat me down and he made basically an Excel spreadsheet on paper. And he explained the process of multifamilies to me. And then I went on YouTube and did my own research. And then I set a goal to start saving money for a down payment. So all the money that I made from waitressing and all the money that I made from nursing went into a fund for a down payment. And then my goal was to buy my first property before 25. And I closed on it at 24, 2 weeks before I turned 25.
Wow, timing.
Yeah, so I wrote down my goal and it made it happen, but my uncle was a huge mentor for me.
And so when you saw that, first of all, buying multifamily before you're 25 is awesome. I think as people who know me and hear me in the podcast, I'm obviously super pro real estate. So I think everyone should have at least one multifamily property in your wealth, circle. But what was it? So obviously he taught you probably the principles of here's how multifamily works and the wealth creating principles. But were you still nervous? What were some of the things you were thinking about? Was there an unknown that stopped you from
Honestly,
jumping right in?
I was not nervous at all. I'm more nervous now, but I feel like back then I wasn't nervous at all because in my mind, I was just like, well, if I do this and I fail, at least I tried it. And I was still so young in my career. I've only been a nurse at that point for 2 years. So I was like, if I make a huge bad decision, I can just turn around and sell it, or I can just start over because I'm still only in my young 20s.
Right.
But I also just had like so much faith in myself and my uncle's teachings that I was just like, I'm just gonna do it. And so we went and we saw the house. I actually didn't even want to go see the house. It was out of not where I was looking, and I was like, I don't want to buy a house here, blah blah blah. And my uncle was like, well, this is what you can afford. In the property value, you're going to gain equity in the house. So we went and I walked in and it had everything that was on my checklist of what I wanted in a house. I wanted a flat yard. I wanted, what's it called, a steeped roof? A pointed roof, a pitched roof. One side had a good amount of bedrooms. The other side had 3 bedrooms. The numbers worked, the foundation was good, and the basement was dry. Those were all the things that my uncle taught me when buying a house. You need to make sure it has good bones. And so I walked in and we both were like, this is a good house. And so I just knew it was a good buy, so I wasn't nervous. And I was like, you know what, just throw all my savings into it, and if it doesn't work out, we'll deal with it, but I think it's gonna work out.
And I feel like that's, for a lot of people, like that's the hardest part, is sometimes having faith in the process, especially in real estate, because there's just so many unknowns. Mm-hmm. But once you realize that you're not gonna have all the answers, and if you find those like baseline principles, like you said, it has good bones, it has, you know, good potential in the future, and the numbers work, then you'll figure out the rest. Because no one who starts in real estate like has all the answers from day one.
No.
Even people who are in it, you know, for a long time. Like I was joking with Ben the other day, for those who don't know, another multifamily agent. But there's stuff that comes up just all the time, that people who have 50 units, 100 units, you just don't know until you're in it. You know, people collaborate and find the answers. So. And
you just learn as you go, and you just kind of have to like figure it out as you go and tap into your resources. So if things do go wrong, I will reach out to my uncle, I'll reach out to my team, I'll reach out to my cousin who's also in it. So I will say I am lucky to have those resources around me, and I do feel like I wasn't as afraid because I saw the process work.
Right, you saw their path to doing it, mm-hmm. and you have those mentors, which I think mm-hmm. is super important.
It was very important.
And when you bought that first property, how many years ago was that for time frame?
About 3 years ago.
About 3 years ago. Mm-hmm. Was that the first stepping stone for you jumping into real estate as an agent, or what was the next phase of that transition?
Yeah, so when I went and bought my house and I got an accepted offer, then all the paperwork and all the emails started coming in.
Sure.
And I would read my emails at my nursing job, and I was just like, I have no idea what I'm doing. I have no idea what I'm reading. I went to the closing table at my attorney's office, and they were like, sign here, here, and here.
You pay, you stay, you pay, you stay. It's basically...
Yeah, and like they did their job very well, but like I was a 24-year-old, like I had no idea what I was doing, but I was like, you know what, just trust the process. And then my real estate agent, who was fantastic, by the way, but she ended up getting the commission, and I sat there and I was like, well, I'm really happy and proud that I just bought this house, but like I have no idea what any of this means. I feel like I should educate myself. And so then I went back and I got my real estate license, because I was like, if I'm going to educate myself and I'm going to know how to do everything, I might as well just get my license so I can keep the money myself. So I got my license to basically do my own deals. And then once I got my license, I was like, well, if I have my license, I might as well try to make some money off of commission so I can use that commission towards down payment on future properties.
So your ultimate goal would be as a real estate investor?
Yes.
And obviously helping clients as well, showing
mm-hmm.
them the path you take.
Mm-hmm.
That's awesome. I feel like someone with your background, like that type of background translates really well into real estate, where you have like the nursing aspect and the waitressing component, where it's still all service and like education type of role, where I know a ton of realtors, like that's how they find their way into real estate. They take those skills and they apply it in a different way. And it's ironic because almost everyone I bring on the show who's in real estate, not finance, I mean, us mortgage lenders were a little bit different. In terms of just, different world. We're just, I guess, wired a little bit different. But in the sense of most people, and I'd say a lot of mortgage lenders too, you don't set out with the goal to be like, I'm going to be a realtor or I'm going to be a loan officer. Like usually you find your way into it from some form or fashion. But I find like that translates really well. Do you see that from your side? Like you pull a lot of the same, practices and thoughts from your previous roles as nursing and stuff into real estate?
Yeah, for sure. And like waitressing, you're juggling so many things and you're seeing so many different walks of life. Same with nursing. So you kind of just learn people skills, time management, and also just how to deal with people. And I think waitressing gave me a really strong background because I started when I was 18 and I did it up until I was 24. So longer than I've been a nurse. And I think waitressing also prepped me for nursing because you have so many things on your plate all at the same time and you still have to put on a face. So I feel like it taught me social skills and time management. One thing I wish I did though, I wish I got my license at 18 and I wish I handed out my real estate business card as a waitress.
That would have been smart.
That's what I wish I did, but you live and you learn and we're here now.
Yeah, exactly.
But I wish I did that.
There will still be a path forward.
Yes. For sure.
Yeah, and so when you, I would imagine, like you said, waitressing, you're juggling in that case like drinks and food, but now it's like you're juggling, contracts and deadlines and people, so it's probably very, very much similar.
It is very much similar, but there has been a difference with nursing and real estate. With my nursing job, I do outpatient, so I am lucky enough that I don't bring a lot of work home with me, emotionally, mentally, all of that comes with inpatient nursing. And so the difference that I've had with real estate is it is 24/7. Yeah, like you can get an email at 11 p.m. and you have to answer it. So that's been a difference. And also with real estate, you need to be on top of your game and you need to be disciplined and hold yourself accountable because there's no one really telling you what to do. So you have to wake up and do it and push yourself versus with nursing and waitressing, there's orders that are ready, there's meds that need to be given. Like you kind of have a checklist of what to do.
And you know what time you have to be there and what time you're expected to go home. And I feel like that's a big challenge for a lot of just entrepreneurs in general, is that there's no like set schedule. And it's funny because I think the people who end up making a career of it, you end up working more because you make your own schedule than you do less, but you just control where you put your time. And I think that's a really cool feature to have in a career. So what do you like most about being an agent, the real estate agent process? Like what inspires you to do it?
I like the challenge of it. I can, challenge myself to set new goals every year, to do X amount of transactions. Like I really like that it's you versus you. You can say, oh, there's so many agents, you're competing against them, which yes, that is true. But at the end of the day, you are responsible for the path your career goes in. So I just like that it's me versus me and there's always a new goal to set and a new challenge to face. So I really like the competition within myself.
And how do you go about that process? Do you have are you big on the personal development, book side of things? Because I feel like there's a lot of people who listen to this podcast and they're either in real estate like yourself, like an agent, or they're a lender, or they're a real estate investor, or just an entrepreneur. So I always talk a lot about the entrepreneur mindset. And I think that point you hit on, interesting to hear your perspective on how you go about challenging yourself. Do you have a certain checklist you go through? I know for some people, for me, it's pretty simple. I go to the gym every morning. I read an hour, hypothetical. I listen to an hour of an audiobook, and then I start my morning. So I get my exercise, my personal development, and that starts my day on a good foot. Pushing me forward towards what you said is the 1% better every day. It's me versus me. I don't care what everyone else is doing. I know if I do my things, I'll be on the right path. But what are some recommendations you have for people who are I want to do real estate, but I don't know if I can hold myself accountable. I don't know if I'm ready for it yet. How would you help someone make that leap?
So real estate can be very, very intimidating. And when you're first starting out, you feel like you're working all the time and you're working for free. So my biggest piece of advice is to just keep going. You have to be consistent. I think the percentage is the first 2 years are the hardest and people usually quit after 1 year. You just have to keep going. And even on the days where you feel like, oh my gosh, what am I doing? I've had those days. You just got to see the bigger picture and the light at the end of the tunnel. And then I also write down goals for the year and I come back and I look at them. So writing down my goals for a whole year has been very beneficial for me.
I like that. And what are some of your goals for the next 5 years?
So I have a 1 year goal, a 5 year goal, a 10-year goal.
Okay.
This year I wanted to pay off my student loans. I'm close. do X amount of transactions, and then a few other personal ones that I just challenged myself on. My 10-year plan, I really want to own 5 multifamilies by the time I'm 40.
Love it.
So I wrote that down, and then my 5-year plan is just personal as well, like get X amount of multifamilies. I just like to challenge myself. I try to set new challenges yearly, and then the 5 multis by 40 is a big one for me.
I love that goal. So I want to dive more into that. Talking more about when you bought your first multifamily, going from 1 to 5, that's a big task, right? So I think a lot of people, when they hear that, they're like, I want to do that too, but I don't know where to start. Like, how do I feel like they also look at the end, like they look at 5 multifamilies as this big mountain of a task, which it is, but you still got to hit base hits to get, to score. So what would you advise someone who's thinking in that same mindset, like, okay, I want 5 multifamilies, as someone who bought your first, what types of things should you be thinking about? Like, how would you go about that planning process of becoming a real estate investor?
I think the biggest thing is knowledge is power. You need to be educated on what you're doing, and you need to understand the process. So I always tell people you need to understand it as a whole. You need to understand the down payment, the pre-approval. You need to have good credit. You need to understand what equity is and the power of equity, because in my opinion, yeah, you can make money with passive cash flow, but the real power comes with the equity that you build with the house as it ages. Statistically, real estate appreciates. Of course, there's going to be divots in the market where it does go down. However, over X amount of time, you will have enough equity where you could pull that equity and then buy something else or pay something else off or go on a vacation if you wish. So I think understanding equity is a huge, huge game changer. And then also, people think you need hundreds of thousands of dollars to buy a house. They don't know that there's a 3.5%, a 5% conventional, the 20%, the 25% of what you can put down. And I feel like teaching people loans, which you can talk more about, that is your expert, I know the basics, but telling people like, oh, you don't need 200 grand to buy a house. You need 50 grand depending on what you're going to buy. And then when I tell people that, they're always very shocked by that.
Yeah, I feel like a lot of people, they disqualify themselves. Like exactly what you're saying. Oh, I won't qualify because I don't have $200,000, or I can't buy that property because I don't know if it's a good investment. Like, how do I know if it's a good investment? So I think from my perspective too, as a loan officer and as an investor, I think that point you mentioned is super important. Like the high level, if you don't have the right high level perspective down, like you'll never be able to execute on the vision. So equity, I think, is a huge point you touched on. But I think a lot of people, especially with social media, like everyone wants everything. Like, I mean, Amazon, my best friend, worst nightmare. Yeah, right? It's like it comes tomorrow. And people want the same thing with real estate, like they see on Instagram. Someone flipped a house and made 200 grand in 30 days. And it's like, yeah, that's great, but that's a different business model.
It is.
You know, that's someone who's doing this full time. That's more high risk, high reward. But the equity piece, I think, is important for people to understand. Like, that's a long-term game. Like, you have to hold real estate for a while for it to go up in value. But you can also do some things to increase the value. So talk about that. Did you do anything on your multifamily? Did you add any value to it? Like, do any work to it? Were there some things you went in and said, well, I just want to do a little bit here and there to make the value increase?
So I didn't have to do too much to my house, which was really nice. I sanded it, I painted it, we went in and deep cleaned it. I had my parents there, my sister there. I put all of them to work to paint the house. We did landscaping. We definitely spruced it up and freshened it up, but it didn't require that much work to it.
It doesn't always have to.
It was pretty turnkey. It's definitely not like updated and renovated. If I did do that, I would put a whole lot more equity into it. However, the house was livable and clean enough where I was lucky enough to not have to do that much work. But that was also on my checklist. I am not handy.
Sure.
At all.
I'm not either.
Painting and sanding is the furthest I will go, and maybe change a light bulb. And so I knew with my first property, I kind of had to get somewhat of a turnkey house because I was not in that position to flip something or to work on something and then not be able to finish it, XYZ.
I think that point you mentioned is really important, because we talk about it a lot on this podcast, is understanding your role as an investor and your vision, so it aligns with like what you're trying to buy, like your buy box. So like you understanding that like fundamentally I'm not handy, like I'm not going to take the deck off and rebuild it. Like that's super important to understand, because it changes the types of properties you'll look at, and then it changes your expected renovation scope. Like if you're not going to take on a project with a deck, then maybe you don't look at those properties. If you find one that is a perfect property but needs a deck, well, now you got a budget to pay someone to do the deck. So I think that's super important, especially if you're someone who wants to go from 1 to 5 properties. Question I would ask like to someone who's thinking about doing what you're doing. Okay, if you don't want to do work, that's fine. If you still want to fix up a property, like, do you know contractors? Do you have a good Rolodex in contractors? Do you have someone who's like a mentor to you who can walk you through how to manage contractors? Because that's fine that you don't want to do the work, but if you're going to take on a project with work, like you need the right people.
Yeah, you got to be prepared, which I was not.
But that's okay. So talk me through that. What are some of the biggest things you learned through owning your first multifamily? I know I talk a lot on the podcast as well about finding agents who also have experience in what you're looking for. So owning a house, being in multifamily, that's an awesome experience to translate to your clients. So what are some things you learned throughout the process of owning your first property, and are there things you would do differently now?
I'm actually very happy with what I bought and what the experience has been so far. And I went into it knowing that problems are going to come up and I am going to have to pay out of pocket. Mm-hmm. So I do prepare for that, and I do have a separate bank account where I store X amount of money in case things do go wrong. Of course, there are bad days and good days, and sometimes my tenants will text me and I'll be like, oh gosh. However, I went into it with the full mindset that this isn't a instant get rich thing. And if that's what you're expecting, then don't do this. This is a learning curve. Some years you're going to be positive with cash flow. Other years you might be in the negatives. And so I went into it very open-minded and realistic, and I always make sure I have X amount. And I have learned a lot. It's been a huge learning curve. Now I've learned things in a house that I didn't know before. I know what electrical fuses are, like what it sounds like whatever.
Elementary,
like
but cliche,
like
yeah.
Boiler, gas heat, like I've learned all that. I've learned like the life expectancy of a water heater, the life expectancy of a roof, and like I've learned if a roof is really old, don't buy it, especially if there's a leak, because that could cost you thousands of dollars. And so I toured houses for a year and a half before I bought my house. And my uncle would walk me through these houses, and he would like say there was like a water stain on the ceiling. He'd be like, the toilet's above that, there's a toilet leak. Or we'd be in the basement and the basement would be damp. And he'd be like, the basement is damp, don't buy this house. And so just walking through hundreds of houses with him every single weekend really, really prepared me. However, the tenant situation that I deal with now, which I have great tenants, but that's been a learning curve, is like learning when to raise the rents, learning when to, put in a new lease, learning what to put in the lease has been a learning curve for me.
And how to go about the communication with the tenants.
Yes.
But if you hadn't just jumped in, you wouldn't have learned all those things.
Yeah.
And I think to go back a little bit on the equity piece, if you had waited until you figured out all of those answers before you bought, which might have never happened, then you would have missed out on the equity appreciation over the past few years.
And the equity appreciation since I bought my house has been great. The property prices where I bought have risen significantly. So I'm very grateful that I did decide to buy there, even though my initial thought was to not. And I feel like that's a lot of time people get cold feet because they do listen to outside voices. Well, don't buy right now, the rate is high. Don't buy right now, the economy is bad. There's always a reason not to buy.
There's always a reason.
And I say, run the numbers. And if the numbers work, my uncle always told me, and other investors may have a different thought process, but he was like, as long as you're breaking even or you're making positive cash flow, it's not a bad buy. And so I would run the numbers on these houses, and as long as they were breaking even, to me, it was okay for me to buy it. But I would have outside voices all the time telling me not to buy a house. And I just had tunnel vision to buy the house. And so I did. And it's been great.
Well, now looking forward, like you can access the equity in that property to fund the down payment on another one.
And that's what I've learned along the way. Like, I can pull a HELOC. I didn't know what that was 5 years ago.
Sure.
So it's just been like talking to lenders, talking to other investors, talking to other people. Like, I'll have an obstacle and someone will give me a solution. And in the process, I'm learning all at the same time.
And I think that's one of the most powerful things with real estate is like the snowball effect, where like you buy that first property like you did in a good market at a good time, put some love into it, now it's worth a lot more. You can pull the equity, like an equity line of credit or a second mortgage, and roll that into your next property. So effectively what you've done is the first property you bought, you're basically recycling your down payment, which is an incredibly powerful tool in real estate. The idea of leverage is one of the fundamental principles of why real estate is so impactful. Because if you fast forward 3 years from now, let's say you have 3 properties, well, now they're all going up in equity. So instead of taking out of the first property you bought, you took equity out of to buy the second. Third property you bought, you maybe recycle some of the one from the first, some of the one from the second to buy the third. Buy the fourth property, you might have equity again in the first one, and you can do it again.
It's just real life Monopoly.
So exactly. Once you get enough pieces on the board, it all starts to come together, which I think is really cool.
And that's what I really love about real estate, because my whole goal at the end of all of it is more time. When you work a full-time job 9 to 5, you are locked in at that hourly or salary pay until you get, a raise, which I don't know if anyone's getting like crazy raises. Yeah. But I was just like, how do I make money in my sleep? And the goal was never to be like, oh my gosh, I want to be so rich. It was more just, I want to be in a position in my future where I can work less hours to be with the people I truly want to be with, which is like my family, my friends, XYZ. So that was also another reason why I got into real estate, because time is freedom.
Absolutely.
And when you clock in, clock out every single day for the rest of your life, and you only get 2 weeks vacation, it's hard to balance, and life does get crazy and busy sometimes.
It's very hard. And I think that the real estate works for you, like you said, while you're sleeping. And one of the benefits, especially with what you're doing, which is the house hack, and you're living in one of the units, is like you mentioned, you get access to very low down payment options. So if we just played out the example that you just did, you buy your first property, you take out an equity line, you get your money back. So that first property, like you said, whether it breaks even or cash flows, you have no money in it. You already got your down payment back. So you own a free $400,000 or $500,000 asset.
I look at it as like another savings account.
Exactly.
That's how I view it.
With a pretty solid appreciation rate, depending on where you are. But that's the power, is you can actually pull your capital out and go buy another property. Like, you can't do that in the stock market. You can't do that in a lot of other investment vehicles, bonds, mutual funds, whatever the case. And your starting point is the barrier to entry is lower to get results faster than other vehicles. But it does take that initial first 1 to 5 years to make that appreciation. But you're essentially, if you're buying a $500,000 property, you're putting 5% down, that's $25,000. But you own a $500,000 thing. So if that goes up 5% in value,
you get it back.
You just get it back. If you do it in the stock market, you start with 25 grand. Your only appreciation's on your 25. So your 25,000 has to go up by 100% to get the same impact that real estate does with 5. So that's, for people listening, that's the power of what we're talking about, is you get the leverage initially, you recycle the capital, and you continue to deploy it in other investments. But it does depend on where you're buying. So contextually, I talk a lot on the show about the idea of markets being hyper-localized. Obviously, if you see on the headline news, markets are down, real estate markets are down 10%, which they are, but not up here. They're certain, Florida, Austin, Texas, etc. But obviously, for people listening, we're talking about here in New England. And the market's changed a little bit over the past 6 months. So tell me about that. Have you seen the market change, or what are you seeing on that side of things?
Yeah, so where I bought more it's Western Mass from where I'm from. I'm from Central Mass, so it's a little more Western Mass from where I bought. the Leominster area, like the Leominster market is super hot, the Fitchburg market, the Southbridge market. Like a year ago, you could have bought these 2-family, 3-families for $400,000. Now they're going for like $500 to $550. So the market is just honestly booming. Yeah. Like the property value is going up so much. And that's why I'm so grateful that I bought where I bought. And then even where I'm from now in Marlboro, the housing market there, houses are not cheap. So the prices are high. That's just the market. But your equity and your value will continue to grow. But I have seen it increase a lot. But when the rates go down, the prices do go up. So before we were at like 7.1, 7.2. Now we're in the low 6s. So it's a push-pull. When one goes up, one goes down, and vice versa. So it's like, yes, the property did go up and it is more expensive, which deters people, but you're getting a better rate. Versus a year ago, it was the opposite.
Right. So if you were able to buy that property 2 years ago at the rate that you got, obviously it only gets better as you hopefully lower it in the future. Mm-hmm. But like we were talking about earlier, you can't replace the price, but you can change the rate.
I tell people to date the rate. Date the rate, don't marry the rate. Have a high rate for, 2 years, wait for it to go down. Once it goes down, refinance.
I agree. I think for an investment property, I always think don't underwrite at the rate you're hoping for. Like underwrite at today's rate. And then if you can refi later, it's all gravy. The deal still works at 7, so it's fine. Mm-hmm. If I can get it to 6%, even better.
That's when I tell people when they are running numbers for a multifamily, I'm like, honestly, run at the highest number possible. Like run it at worst case scenario. Like don't run, you can, but I'm like, don't bank your numbers on rental properties on the highest rent that you can get.
Correct, yeah.
Do it either at fair market or lower. Because, for example, my house, I could be getting more money, but my tenants already live there and they're good tenants and they're good people. And I morally couldn't raise the rents on them. And I ran the numbers with the current rents and with the current fair market rent, and it ended up being fine. But I tell people, don't run at the highest that you can get, because then you might be pinching for pennies.
Yeah, you can't be over optimistic.
No, you can't.
Say, you can make any property look good on a spreadsheet.
Yeah, but you gotta be realistic.
You gotta be realistic.
And like some landlords, they are like, nope, I'm getting this rent, I'm getting top dollar, which is fine. Everybody runs their business a different way. But I did have a hard time raising rents, and I still do.
Especially when you live at the property, it's even harder.
And you know the people, and they're good people, and they take care of your property, so it is hard. And so a lot of these houses that are going for sale now, the multis, the rents are like $1,400, and I'll have clients, they'll be like, well, they're paying $1,400, and I'm like, I guarantee you, they've been there for 10 years, they're good people, they'll probably expect the rents to raise. But that's just kind of what happens. A lot of the times landlords do let tenants pay below market. Not all of them, but a lot of them do.
The old landlords do.
Mm-hmm. I'm a new one, and they're paying below market, so.
Well, yeah, that's true. Well, you have a relationship with them, somewhat, so it's harder. Yeah. But I think that it is hard, especially when you don't have a property manager, so it's on you to go there. They know who you are, their story, and you're changing their housing payment. Is hard. But I think how you approach that too is really important. Like when I talk to other investors, I always try to figure out what's your process? How do you communicate it the best? And I'm still a sucker too. Trust me, I have tenants who are probably 30% below market in a couple apartments. Not across the board, but a few people.
It's hard.
It's hard.
It's hard.
I have a 70-year-old woman. She just lost her partner. They've been in the apartment for 35 years. She pays. I got her from $1,000 to $1,500 a month. Market's probably $2,000. But he just passed. I'm like, she's on her own. I'm like,
I'd be like, you can live there for free.
I'm like, I'm not touching your rent. It's not happening. But to some people, I think it's important to understand that the tenant process is a lot of psychology too. It's giving people options or choices or showing them data. So there's definitely still a way to navigate that. But how are you seeing the rental demand? Is there a lot of people still filling apartments and looking for rentals?
Yeah, there are, and the rental prices have gone up as well. And so even in Worcester, for example, the rents in Worcester have gone up so much. They're getting up there. So, landlords, they can charge a high rental price, and someone will move in there
and still get it.
Yeah.
Yeah, and I was actually, it's something I look at too if anyone wants to check out the fair market rents, you can go to hudfmr.com and look up what Section 8 would be willing to pay for these rental units. So the government assistance, for those listening, if you're looking to get subsidized housing, the government will post the amount that they're willing to pay for a 1-bedroom, 2-bedroom, 3-bedroom, 4-bedroom. And one of the things I look at when I enter into a market, especially if I don't know the market that well, is I want to see that next year's rents are higher than last year. Because that shows me that the government, who presumably is doing a lot of research to get to this number, is saying, well, we have to be willing to pay more to support our subsidized tenants getting housing because the market's paying more. Someone is willing to pay $2,000, but we're going to have to pay around $2,000 to get that. So it's a good sign for me, where some markets, it's interesting too, even around here in New England, Massachusetts, Rhode Island, there are some markets where rent prices are down 10%. There are some where they're up 10%, like Worcester. It's just so hyper-localized.
It is.
It's really interesting.
I haven't seen any go below. I've honestly seen a rise.
Yeah.
But, good for them if they can get lower, the renters.
Yeah, well then it's interesting too, because some of the markets, I don't remember the last one I looked at, but like, for example, there was one I was renting in East Providence. Like the HUD rent was $2,100 for a 2-bedroom. But I'm getting $2,700. Like I already have a tenant fully rented for $2,700. So it's like, sometimes it's not always directly related. A different example, I own property in Blackstone, Massachusetts. A 4-bedroom, for some reason, Blackstone actually falls within almost like the Middlesex County side of Worcester County. So HUD would pay me $3,600 for a 4-bedroom.
For a 4-bed?
Correct. I have a family in there right now for $2,400. Because the open market won't pay me $3,600, but HUD will. So it's like, I think it's still important for people listening to like really take the time to learn the market or find an agent who really knows what's going on, because you can be way off. Like if I underwrote that property at HUD rents, I probably would have paid a lot more for it. But had I not known the market and talked to someone who did, I realized, okay, well, that's only if I go Section 8. Like the market won't pay me that. I have to go true subsidized housing to get that, which is fine. But sometimes those applicants are hard to find. They're hard to find in the marketplace. So I think it's really important you talk to like a local agent who knows the market, is involved in multifamily, who's done it themselves.
Yeah, I started to learn the rental market just through open houses, and like the rents are on the MLS sheet and going through the MLS sheet and looking up the rents. So that's really how I learned the rental market. And then I also used Rent-A-Meter and then Zillow. And I would compare. So the MLS would always be a little bit lower because there was always, a long-term tenant.
Sure.
And then the public online forums was always higher, and it was only off by a couple $100. So if I went on MLS, saw it was a few $100 lower than what it should be, I would just be like, okay, they're paying $1,400. I could probably get $1,800.
Right,
and that's kind of how I did it. And like I said, I tell potential clients, and also when I'm looking for a house, going just back on it, I'm like, you could get this, but it may be a stretch. Right. And I don't think you should run your numbers off of this. And so I do tell people that, because they're always like, well, I feel like I could get this. And I'm like, you could. However, you don't want to run your numbers based on could. I just try to tell people, even when I'm doing myself, to be a little more realistic.
It's super important, especially because if you overshoot that number, you have more vacancy. And vacancy is a killer. If you wait an extra month to get that extra $100 on the monthly rent, well, you wasted a month of rent. Like if you had put it lower, you would have rented it a month sooner.
Like $1,600.
So you end up losing.
Yeah.
You end up losing money, which I think is, not everyone understands that. But referencing multiple sources is great. Finding someone who knows how to do that, like a realtor, like yourself.
Yeah, and I just think I could be making more on my multifamily, but like I said, I sometimes I think greed can get in the way. And if you're doing well already with the house, it's in the positives, you're not sinking, you're not below on mortgage payments, I just kind of take the route of, okay, they're good people, let them pay what they're paying, I'm still okay and they're okay. So I kind of go at it, and not judging other people who don't do it this way, but I'm just like, I'm happy, they're happy, they help. It's like a mutual relationship.
And that comes back to you, with them treating the property nicer because they like you, So there definitely is a balance between.
Yeah, and in Massachusetts, the tenants honestly have more rights than the landlords. The Massachusetts they're not great. They do favor the tenant. And so I'm like, okay, like I could raise the rent, and then they leave and I get someone who comes in and squats. Then what do I do? Then I have to go to court. I have to hire a lawyer. So like, and it's realistically for a few $100, which like does make a difference in the grand scheme of things, but I'm already building the equity. I already know this is a long game for me. So I don't even want to risk going down a legal route. And then also I'm not getting my rent at all. And then I have to pay for my mortgage because they're covering the mortgage as is.
Right.
So I don't like to play the risk game either. But maybe that could change when I have a few more multifamilies. I don't know. But as of right now, that's how I conduct it.
Yeah, that's a good framework for people to hear, because I think sometimes, real estate investors get a bad rap, right? Yeah. Because they come in and they raise your rent and they want you to do all these things that you haven't been doing for 20 years. I remember I had a tenant who they had made the backyard theirs. But so when I bought the property, I'm like, we're going to have to, clear out the backyard. Like, you can't have your boat and your kayaks and your canoes and your junk back here. I'm like, well, I've been doing this for 30 years. And I'm like, well, it's not in your lease, and I'm the landlord now. So I'm happy to have you stay, but I can't have you keep all your stuff here. Mm-hmm. And I'm also going to have to raise your rent. They're paying $800 a month. So it's, it's having those conversations and trying to find like a middle ground. So I really appreciate your approach, because I don't think everyone considers the tenant as a customer. Like, it's your servicing your customer. It's a dialogue. You want to find a number that makes both people feel like they won. Yeah,
which I've tried to do. But like I said, I have great people in my house. If I had people that weren't so great, a different side of me may come out.
Yes.
But as of right now, it works. It's a good relationship. I'm happy with it. So I just don't see the need to rock the boat.
Yeah, if you've got a good thing, it's sometimes best left alone, for the most part.
Yeah, we'll see in a few years down the line, see where things go. Things can always change, but as of right now, I kind of just, I could make more money, but they're good to me, and I'm good to them, and we'll leave it at that.
Yeah, we all win. Mm-hmm. And so obviously it sounds like you're then optimistic about the next, 6-12 months in the real estate market up here in New England?
In regards to buying rentals?
In general, in terms of, do you think, I always like to ask the question, which I think it's a loaded question, so forgive me. But you'll see all over the internet, like, is now a good time to buy? Like, should I wait? Should I not? I want to sell, but I don't know if it's a good time. Rates are high. What would your response be to someone who's fearful to buy because they don't know if it's a good time?
So I always think there's no time like the present, and I always encourage people to buy. Especially the number one question that I get is, well, the rates. And I go back to what I said earlier, date the rate and then refinance it down the line as it drops. In regards to pricing, I do think property prices are going to go up next year, and that's just the market, and that's why I do encourage people to buy now. And if you buy now, you can pay off your loan faster. And if the properties are most likely going to increase, you're actually going to be saving money. And then I just think fear is a huge factor in real estate.
In everything.
In everything. Like I said, back to when I bought my house before, like, don't do it. The rate is so high. And I did it anyways, and it's profiting. And so if the numbers work, you can afford it, you can get pre-approved. As long as it financially makes sense and you can afford it, and it's gonna either break even, singles, multis, condos, whatever, as long as the numbers work, I think you should buy when you can and get the pre-approval. And I think the longer people wait, they end up regretting it, because then the property goes up by $100K in a year or 2 years, or the rate is still really high. So I just think there's no time like today. The seller's market, it does tend to slow down this time of year. I feel like a lot of people don't buy as much during the holiday season. However, there is still always buyers out there. As an agent, you just have to hustle more.
Are you seeing the typical seasonal trends right now?
Yeah, like the houses for sale are sitting longer than normal for a few more weeks, more than the average. I think like the average in Worcester was like 30 days. And
it's still fast.
It's very fast. Yeah. And now I probably a few weeks after that. Just because, buying a house, you do need a chunk of change.
Yeah.
And it's Christmas, it's the holidays, people are saving money, trying to spend money on, all the things. So I do see a slowdown time in the market, but that just means as agents we need to get more creative.
And that might present a good opportunity for buyers.
Yes.
Because there's less people in the market.
I do think buyers do have the upper hand right now, because if a property is sitting for X amount of time, buyers are more likely to go in at a lower offer and then a seller will counter, and you do come to a middle ground. But I don't see a lot of properties going for over ask right now unless it's priced very well and it is a competitive spot. But I do see them sitting longer and less offers.
And what's your opinion on the question? I go back and I have my answer, but I'm curious on yours. Price reduction from a buyer standpoint. Buy the house for a lower price or get a seller credit to cover your closing costs. Which side would you lean on, or how would you help a buyer understand that framework? Because I have a feeling that a lot of times, I hear it a lot from buyers, that they think a house is overpriced. Fine, maybe it is. Ask your realtor, I'm not chiming in on that. But let's say they think it is. So the question becomes, do I come in and offer a lower price? Or do I offer a similar price and get a seller credit? Like, how do I know what's better for me? What do you lean on one side or the other? How do you help someone who's debating that?
I think it depends on a lot of factors. If the open house was busy, like was the house new to the market? Was it a busy open house? Are we expecting a lot of offers? Because if we're expecting a lot of offers, I would probably lean towards more the seller's credit, because to the seller's mind, even though they're giving a seller's credit, they're still getting the price that they wanted. That number that they want, it means a lot to them. So if you really, really want the house and you think there's going to be a lot of activity on it, I would probably lean towards a credit.
That's a good tact. I like that answer.
Would you agree?
I would agree. I thought about it more from the buyer's perspective as far as what's more impactful to them.
To them would probably be a price reduction, but emotions come into play with real estate.
Definitely.
So logically, they would want a price reduction, but emotionally, if you really want the house, I would probably go in a little bit higher with the seller's credit.
With the credit. And you can definitely build a case both ways. I think there's no wrong answer. But I had a client recently who was going through the same conversation, and he was saying, he called me, he's like, what do I do? Like, we just negotiated $15,000 credit on the property after home inspection. Do I lower the price? They were going back, they need $15,000 was the gist of the conclusion. We're getting $15,000. Do we take it off the price, or do we take it in closing costs? I said, that's a great question. So I said, look at the numbers. And for him, if he takes $15,000 off the price, obviously this depends on the rate and the mortgage insurance, but that's probably like $100 less in total payment, $95, $100 in payment, versus if you take it as a credit, you'll save $15,000 today. So my question kind of then becomes, well, what's more important to you, like $95 a month or 15 grand? Because if you spend $100 a month, it's going to take you 10 years before you spend that 15,000. What could you do with that 15,000 in 10 years used elsewhere? Could you go put it in the stock market and make 8 to 10%? Could you put 15,000 in the property for repairs, make it worth 25, 30,000 more? I don't know. Ball's in your court. But I said, I tend to lean on the side of credits as an investor, because cash is, as an investor, that's your biggest, most important commodity. No matter how much money you have, if you invest in real estate, you run out. So it's like every time I'm trying to figure out how can I put less cash into the deal. But you can definitely build a case both ways, because if you buy it for a higher price, you're starting with less equity. So it's kind of twofold. It really depends.
Yeah, it's a push-pull. But I would have leaned towards the credit as well.
Yeah, if it's my money, I personally would lean credit. But I have people say, you know what, I'd do the math. If I save $90 a month for 30 years, 360 payments, that's 35 grand. Like, you're right. But if you're buying a multifamily, it's not really you paying the interest anyway. It's kind of offloaded to your tenants. So I would kind of counter that to say, well, what could you do with that $15,000 otherwise? It's important to think about.
It is.
But I think you can go both ways. Do you see more opportunities now with properties sitting a little bit longer for kind of this type of negotiation? Is that
There's definitely more room for negotiation. It does give the buyer an advantage to go in lower. And I do think the seller will, entertain it a little bit more. But sellers, they can be tricky. They have a number in mind, they want it. They may say no to the lower offer. So I just think you need to go in at a fair value and then come to a number that you both can mutually agree on. But yes, if the property does sit for a longer time, you do have the upper hand.
I think it's funny where, I don't know if you see this too, but I have some clients, and there's always one or two, but they'll call me and be like, the property's listed for like, say $500,000. Like, I'm gonna offer $350,000. And the realtor will call me behind the scenes and be like, telling him like the comps say it's worth $450,000, but he wants to try at $350,000. And it's like, that's kind of offensive. If you offer $350,000, I'd be like, take that and run. I'm all set.
I've had that happen. And I told my clients, I'm like, if you, like, I have to write it. If I'm your agent, like, I have to write it, but they're going to look at this and not even want to do business with you, because sellers always think their houses are, it's like an emotional attachment. They want the most that they can get. And sometimes they are overpriced, which is fine. That does happen. But then you do have to be realistic that if you run the comps and it's worth this much, to say it's worth $100,000 less is a little, you might pull some strings in the wrong direction there. So I did tell my clients that. I'm like, I have to do it if you want me to. However, I prefer not to, because they're going to say no. And then we may put a bad taste in their mouth, and that leaves out room for negotiation.
Mm-hmm. And I think that, you get that psychological impact of like, that I don't want to work with you. You just told me my house is worth $350,000. But I also would counter from the investor's perspective. And if you were to put yourself in the position of a listing agent selling a house, selling multifamily, let's say, and you had an investor come out look at the property. They walk the property, they don't really agree with where you have it listed, or they think it's worth less, or maybe they just think it's a great property, but for me to buy it, I'd have to be at this number. Would you be more grateful that you got an offer after a showing, or no offer, no feedback?
I think feedback is always good, because then you can go back to your seller and you can, tell them what's going on, and it may change their mind if it's consistent feedback that everyone's giving. And there does need to be a price drop, it could be good. But if the offer is super low, it's definitely not a good thing. But it also does show that the house is good, just the price may need to be readjusted. So,
and I think that for all the investors listening, I've talked about this before, but I was talking to a few other investors who have 400 or 500 units, many more properties than me. And one thing they said to me that was really impactful that I'm trying to get better at. I'm not 100% there, but any property that you take the time to go see and walk and actually tour should mean that you've vetted many other deals before. You selected this one as a good opportunity, which means you've probably taken the time to actually underwrite it versus you take it from back a napkin, hey, it looks good, put in an underwriting sheet, it looks really good, let me go see it. If you've already put in a lot of time and effort as an investor to go through that process of finding the deal, vetting out a few, selecting one you like, setting up a showing, go walking it. From the listing agent's perspective, they've used their time to meet you at the property, show you the property. What the investor I was talking to was saying is, any property I tour, I put an offer in. They might not like the number, but if I take the time to go see the property, I'm putting in an offer. I think that's a really interesting perspective. Now, granted, this is for people who are they bought more than one property, and they're looking for their next deal. But I think that's an interesting thing for investors who are listening who, like, let's say, have cold feet about putting in an offer. I've done it many times where I see a property, I'm like, oh, I really like that. If it was $200,000 less, does it hurt me to have my agent put an offer in and explain, here's my feedback, here's why, X, Y, and Z needs to happen. I think these are the comparables I saw. Did you see something different? Give them feedback and an offer. And sometimes, you're right, you might, make the seller mad and you might never hear from them again. But sometimes 2 months go by and they call you back.
Has that happened?
Not to me, but to people. Because I haven't listened to my own advice. But to people, they've called them back and said, hey, we're still on the market. Would you be interested in taking another look? They always say, no, I'm firm on my number. This is my best number. But sometimes they do call back and they'll sell it. because you were the only one who showed interest and actually gave them an offer. So I think it's interesting. Think about.
Will they get the price that they wanted, the buyer?
Sometimes. I've talked to a few different investors. Some will put their best foot forward right off the bat. So they call back and say, that's my number. If you want to sell to me for that number, I'll sell to you. Or I'll buy your property. So they have a firm number. Otherwise, they might say, well, sometimes they're agents, I'll maybe cut my commission or I'll take out this other credit I was asking for, but they're firm on the number. And I've had some who, depending on the property, they might play ball over, $5 or $10,000. But I've heard from someone on the podcast I had a few weeks ago, he's a flipper developer, saying the same thing. He's like, I throw offers at land, at development opportunities all the time. Anytime I see one, I'll underwrite it, throw an offer. 80% don't get it, but the 20% that hit, I got my offer accepted with my terms on my price that I wanted. And it's interesting.
It makes me think the property was overpriced from the start. But they did show interest, so they got the call back.
They did show interest, so they got the call back. Mm-hmm. Instead of a price reduction and waiting 60 more days, they called back the guy or person who was interested in it from the beginning. Interesting concept, because they were talking about this idea of these are full-time real estate investors, which is a little bit different, than your typical person. But what metric is most important to a successful real estate investor? You need something to track in every business. So what is it? Is it number of properties you look at on MLS? Is it number of deals you put in your underwriting sheet? Is it number of phone calls you make to wholesalers, realtors? What is the metric? And they've all determined that the key metric is offers submitted. Because just like the old sports analogy, you can't score if you don't shoot. Mm-hmm. So it's all about offers, which I thought that was really interesting, where most people are like, oh, I don't have deal flow. I don't have deals coming to me. I need to meet more wholesalers, or none of these deals work on paper. It's like, well, take the time to know what number works and then get yourself to a position where the deals you actually go see mean you liked them from the beginning, you like the numbers, you just disagree on the price. So put an offer in.
And then see what they come back with.
So these guys that I'm talking, they put in 60 offers a month. They shoot for 40 to 60 offers.
Wow.
If you think about that, that's a lot of offers.
That's a lot.
But they might get 1, 2 a month. So they could buy 10 deals a year.
That's great.
That's great. And obviously they're doing it at scale, so it's different. Mm-hmm. But I think just something important for people who are listening to this, who might have a few properties and they're interested in buying their next one, but they're stuck. I wouldn't necessarily attribute it to the leads you're getting as opposed to how you're handling those and the properties you're walking, how you're addressing the offer. And we'll stay tuned. Hopefully I take my own advice. So we're obviously about wrapping up here, and I always ask people the same question at the end of the show. The question is, what are your top 3 recommendations for people who are interested in getting started in real estate, whether they're buying real estate, maybe they want to be an agent, they want to learn more about investing? Is it books, podcasts, or maybe just a general frame of thought?
Yeah, I think the biggest one is just the fear aspect. I think just seeing the bigger picture and educating yourself through knowledge, whether it be books, podcasts, mentors, YouTube, learn the material. And then I do think the biggest obstacle is the fear. I mean, knowledge can be free. You can go out there on ChatGPT, YouTube, get all the resources you need right there. But I personally think that one of the biggest struggles in real estate or becoming an agent or just setting goals for yourself is the possibility of failure and just getting over that fear. So I think if you can get over that fear, you'll do great.
I love it.
That's my advice.
I love it. Well, thank you so much for coming on.
Thank you.
For those interested, I will put all of Abigail's information in the show notes, so you can reach out to her, follow her on Instagram, get in touch if you want to talk more about real estate.
Thank you.
Awesome.